This numerical data visualization shows the official index score for Izmir's commercial real estate in the second quarter of 2026. It sits at a massive 254.5. When we look at the year-over-year data, prices have jumped 25.7%. This specific data point is driving media headlines, claiming that real estate in Izmir remains a guaranteed win. For the past 3 years, the market conditioned investors to believe exactly that. A psychology took hold where acquiring absolutely any property, regardless of its specific merits, resulted in rapid wealth accumulation on paper. Relying solely on peak nominal index scores creates a dangerous illusion of a risk-free market. Those top-line numbers are currently hiding severe underlying structural weaknesses. Beneath these record-high price tags, the actual engine driving the market is actively stalling. This trajectory line chart reveals the reality of the market's momentum. Look at the quarterly price growth. In just 1 year, that momentum plummeted from 8.5% down to a sluggish 5.0%. The national data paints an even starker picture. Despite an impressive 29.4% increase in nominal price, the market actually shrank by 2.2% in real terms, meaning once you adjust for inflation, investors actively lost purchasing power. Nominal price increases have decoupled from actual profit. The market is pivoting from a phase of indiscriminate growth directly into a contraction of real value. Think of the market like physics. A heavy object pushed uphill hits record elevation, but rapidly loses the speed to keep moving. This dual-axis chart maps that exact dynamic onto Izmir. While the absolute prices, shown in the rising bars, remain high, the acceleration has fractured. Izmir's annual growth suffered a severe 12.9-point drop, falling from 38.6% to 25.7%. This painful normalization phase is shaking out weak, over-leveraged investments that cannot thrive without high-speed momentum. Investors must abandon the comfort of a rising macro trend. Survival now depends entirely on evaluating the capacity of every single individual asset. That official 254.5 index score we saw earlier is a blended average. In the real world, a blended average property does not exist. You cannot apply that single number to the modern A-class office spaces in Izmir's high-rise districts, nor does that average apply to the massive industrial and logistics hubs in Kemal Pasha or Aliaga, which operate on entirely different economic drivers. It certainly doesn't dictate valuations in bustling pedestrian areas like Alsancak, where foot traffic and brand tendency hold the real power over price. A permanent gap is widening between premium, high-performing properties and average buildings, concentrating real gains into a specific tier of quality assets. Measuring a commercial property's worth strictly by its sticker price in Turkish lira is an outdated metric for a hyper-selective market. Today's investors must ask a completely new set of questions. How fast can rent be updated? What is the risk of vacancy? What is the alternative capital cost? A property's internal microeconomy now dictates its valuation entirely. The quality of the tenant profile and the physical relevance of the building matter far more than the zip code alone. A reliable, inflation-beating cash generation strategy is now the single viable shield against the rapid depreciation of your real capital. This chart maps the regional context. Izmir's 25.7% annual growth sits below the overheating rates of Ankara at 32.5% and Istanbul at 27.8%. Lagging behind these megacities isn't weakness. It indicates a market stabilizing faster than its peers. Lower macro momentum reduces the risk of buying in at an inflated peak. It offers a safer, far more rational environment for strategic investors to negotiate deals based on actual yields. Izmir's price growth continues, but the era of the easy money lottery has ended. The old market rewarded simply buying a ticket and waiting. The new market requires precision, careful calculation, and highly active management. The investors who win in 2026 will not ask, "How much will this rise?" They will ask, "Who will rent this and will it beat inflation?"